Hey everybody, Mike Fairborn. Hope you're having a good day and a good day in the markets. Welcome back to Swing Trading. Looking forward to our discussion today, folks, where I really wanted to talk about combining two kind of powerful tools out there. One, with price patterns. We talk about price patterns within swing trading, but also we're going to tie back into an indicator that's giving us some indications of, squeeze indications and that compression before a potential upside move. I wanted to combine those two together in terms of what we're going to be looking at here with swing trading. So price patterns and indicators may be pointing in the same direction. Look forward to our discussion, folks. Welcome to all of you. We do have Ray in the chat. I'd like to recognize Ray, Ricebird, Lola, Jerry, Andrew, Ocean Life, Scott, and Beth. Folks, if you're new here for the first time, we focus in on that section of the market of a given stock where we're looking at the ebbs and flows of the market and really trying to look for those areas where the market might be strong to the upside or to the downside over a distinct, specific time frame, generally 3 to 10 days as we look at it within swing trades. I'd also like to welcome into the chat a friend of mine, known for a very long time, also my manager. Really appreciate him being here. Scott Thompson in the chat. So welcome to Scott, folks. Any questions, comments you have, definitely throw those in the chat. Love to, I'll keep an eye on that as well. But Scott does a great job. Definitely follow us on X. Scott has posted in my X handle, Mike Fairborn CS. I'll also note Scott Thompson CS as well. So with that, let's dive into some disclosures and get the show on the road here. Now, information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. Multiple leg option strategies will involve, multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put does risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paper money software application is for educational purposes only. Investing does involve risk, including the loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price. Now, past performance of any security or strategy does not guarantee future results. And folks, if we do dabble in to dividend-paying stocks, I just wanted to note that dividends are not guaranteed and they can be cut at any time. Now, a quick note for those of you that are new, and welcome to all of you joining us today. But I wanted to just give a quick reminder as to what we discuss here within this class and really help to kind of visually illustrate that topic that I brought up previously, where we're looking at that section of the market or within a stock where we're looking for strength to really follow through. You'll notice over here on our chart to the right-hand side, it's these ebbs and flows of the market. In this case, we're looking at the flows, right? We want to see and try to capture maybe some of those ranges where prices have maybe consolidated and are also showing signs of a possibility of a reversal. And that is a move back in the same direction of maybe the underlying trend, the long-term trend, whatever that might be. You can see as we look at this, what we're really seeing here is the formation of a bull flag, folks, and it is bullish. It is short term, at least in terms of the way we look at it, days to weeks to form. And as I've talked with Scott about this too, in many cases, we're looking at 3 to 10 days. So ultimately up to maybe 2 weeks time frame is generally the time frame. Now, some traders will look at it a little bit longer, and some are maybe towards the shorter end of that range. Okay, but as you can see over here, it is really a construction of a strong upward move, noted as the flagpole, followed by a more mild pullback, and then a break of that resistance. That break of resistance, which we do use in this class pretty frequently, is a break above that upper channel trend line. And of course, we do refer to as Caholts, closes above the high of the low day. We're seeing one of those in there. There can also be breakouts above a particular range. So just a quick reminder, not to go into too many details here, but this is a very, very helpful slide, particularly for those of you that are just joining us. There are a few names here I didn't recognize, so welcome all. And let's dive in just to do a brief overview of the markets initially. So here is the S&P 500. Now, over the last couple of weeks, we've been talking about the potential, the possibility of one of the key patterns we discuss, and that is flag patterns. In this case, it could have been a bearish flag pattern. We got a pretty nice bounce off of that 5,500 level on the S&P 500 index right here. So it remains to be seen what, in fact, we could get here. It is interesting just to note, sometimes stocks after a pullback, they can go into an extended sideways channel. The one thing that has been going through my mind, and I think I'm not unique to this, I think there could be a number of people looking at it, but it could be a question of tariffs right now, right? In terms of a number of those tariffs kicking in tomorrow, April the 2nd, purposely past April Fool's Day, so it wouldn't be an April Fool's situation. But tariffs, has the market already priced in those tariffs? Was this what we were seeing or not? And what might unfold after? There could be a lot of very interesting indications. Now, right now, in terms of the market, if it's going to be a pullback and the possibility of a bear flag follow through, something along these lines, a sharp downward move and and then a more mild correction to the upside, and then a break on lower is what we'd be looking to see here. That would mean that this potential level of support at 5,500 could be very, very important to keep an eye on here. And we shall see, what happens. I have noted over here just a couple of quick notes. And the reason why I'm taking a little bit more time on this today is the fact that there is a big now resistance level at that 56.60 that we've been keeping an eye on. We've also got a longer term moving average. I'll finish up on that right now as we put that in. That would be the 200-day. I'll quickly pull that up for you right now. Here is the 200-day. That was very, very close to share prices as we had been looking at those. But here is the 200-day moving average. You can see maybe a few different levels of resistance. You got prior highs. You've got the 200-day moving average. We may need to get above here. And notice over here, if we pull this back, boom, there is some potential resistance above that point. So just some areas to keep in mind as we look at, potential bull flags in the market or bear flags. It could be very, very challenging if we're fighting, the wind, so to speak. If the wind is in our face, if the markets are dropping, there could be fewer bull flags out there, but there might be some sectors that could be holding up better despite market weakness. Let's do a quick glance at those next as we dive into this. So here is our sector grid. I did get a little note that came out in the class, or in an earlier class that I was doing chat on about the sector grid. I made a note that, if you want to take a look at this, I can share this grid right now with you. And here we go. We'll just share this grid. I'll put it into the chat right now. It's not a ThinkScript, so it's just simply a grid of the S&P 500 sectors. A quick note on that too, to the point of where the market is at. If we look up top here, some of these have been, like for example, energy has been one that's been generally flat for a period of time, but more recently breaking higher. That's a pretty good contrast to many of the sectors that have been basically down, or flat, really flat or down. The only other one I would say that might be of interest too is we have this general move to the upside, and notice how we have been holding a sideways range. This is healthcare. This is more of a defensive type play, but we'll see some of the stocks that we're looking at today in terms of the flag pattern that fall within that group in healthcare as well as energy, because a lot of times when you're seeing the sector maybe show, and what we're actually getting over here is, this is kind of a longer term flag pattern within the sector. Do you see it all? And of course, within the sector, there are some companies that have broken higher and some that have not broken higher. But, but the whole thing could be a bull flag setup, perhaps. Over here too, energy, kind of the possibility of a bull flag setup. I would say this is also quite interesting too, because we just took out maybe some highs over here. So do you note that these are kind of falling in to that general price pattern that we'd seen back on our original slide deck, right? We're seeing some strong upward moves followed by some consolidations, but really only across a couple of different sectors here. Okay, now let's do this. I want to go up top and take a look now. Let's get back to our regular charts because I did want to review some of our trades from last week and see how they're doing first. So we did have AT&T. We talked about AT&T. AT&T has continued to move higher here. Let's break this down a little bit in more detail on AT&T. Now we put this trade in. This was, and you might see that same flag pattern that we talked about last week. Here is a move up and a consolidation. We had a few different signs of an indication of a possible break of resistance. We had, first of all, off the bottom, we had kind of a bounce off support, and then we broke a little bit higher, but boom, right there, we took out this downward sloping trend line off the top, and prices have since gone higher. We only have 100 shares that we put on our example trade here, but it has done what we were anticipating it may do, which was go higher. Keep an eye down here too. We talked about this a little bit last week, but we might actually get the move and possible, we'll see if we get it, a possible target that could be hit ahead of earnings, but just something to keep an eye on. You've actually got a dividend payment down there. As I mentioned in the disclosures as well, just a quick note, that dividend paying companies, can cut that dividend at any time. But if we were to hold through the dividend, and this is a dividend aristocrat, by the way, so they've raised dividends each and every year consecutively for at least 25 years. It's beyond that, but it is one of the higher dividend paying stocks out there. So it's getting close to 4%, a little bit below, but you can see it right there. Okay, quick note on this in terms of our target. One of our initial targets, we talked about this last week. We said, hey, as we're looking at a potential target, there are two targets. There's target one. Let me change some colors up so you can potentially see target two. I'm just going to kind of eyeball this and estimate it. But target one would be when prices come back up to the prior high at T1, some traders will elect to take it off. Now, we didn't do that. I've kept it on, but we did hit target one because we got in right over here as we were just barely beginning to inch higher off of this potential flag pattern. Okay. Now, T2 would be where I've got a line up here. Okay. And T2 is just simply looking at the initial pull of the move, followed by the next leg. This might be a little bit higher, but you can just get the point. The T2 would be a full extension of the initial pull of the flag, measured off the move, the flag pull, measured off the move of the flag portion itself right there. This is the flag portion, okay? And that's the extension on up. Now, a quick note on this, looking at this, there could be a longer flag pull setting up as well. Notice I've used this pullback here to highlight the initial pull. If we take this same exact range and we measure it over here, it's about 4.25 in terms of points. And that puts us at this level. So we're very, very close to the possibility of a T2 target. However, there may in fact be a larger pattern, a larger flag pull developing right there. Notice that's quite a bit bigger. In fact, it's like that much bigger in terms of price, longer in terms of price. If I were to measure that up, I'm just going to eyeball it here, but we've got, it might be somewhere in this neck of the woods, around 32-ish. I didn't put an exact measure on the low to the high here, but that could unfold. So getting back to some of our exits that we talked about, the potential for exits, one of them that we did talk about was, as we're waiting for prices to potentially reach a T2 level, a target 2, I'm going to go into a 6-month chart. Just take a look at this a little bit better. I'm going to pull down my y-axis to show you this. But you'll note over here that if we put on a simple moving average of a 10-day that oftentimes has some historical tendency to give us a really good sense of, a lot of times if prices start to break higher, we talked about this a little bit last week, prices, you might get a lot of price action that occurs above a 10-period moving average, the kind of the pull formation or even the possible formation of the next leg of the flag or the target of the flag. We did break above that here. We talked about it last week, but we also said that this could present an exit if prices dip below. And you can see what's happening. Each day that goes by, well, it's a 10-period moving average. And if you look at the last bit of data, prices have been going higher. And so each and every day, we're kind of inching up. And that could be like allow us, I should say, to adjust our potential exit, which is that stop over here. We read the disclosure on that already, but with stop orders, but I'm going to put it just below that moving average. Now, there are other ways that we discussed. We talked about ATRs as a potential exit. We talked about prices, dipping below the low of the prior low day, right, as a potential exit point. We're letting this one kind of run. And generally, when we're looking at T2, we have been doing that in this class. We want to give the stock a chance to meet its target, and also if there was that larger target at play in place, this kind of trailing moving average, if you will, in a sense, that might trail up if prices continue to go up, or give us a level to exit if prices dip below it, could be a good way to track if it was to go up to, let's say, that 32 level on a larger run. Okay, on this trade, we're just going to be looking at maybe taking profits at this level here, but maybe we'll take half as an example. I think that'd be a fun example to do. We take half off here, 50 shares, and we'll leave the other 50 on for a possible higher price target, or if it knocks us out by trading below that moving average. Okay, the nice thing about this is we can adjust it each and every day up if we do decide to use the moving average. So any questions on that? I think we're okay on that, but that's AT&T. The next one that we did last week, we took a look at the miners, the gold miners, because gold was up. We did not close below that moving average, and we were talking about a close below the moving average as a potential exit. It bounced off it again. Still pretty steady in terms of the possibility of this follow through. This was an OCO bracket order. You can see we set that up very close to our upper target if in fact this flag pattern followed through. And we're just kind of meandering. What's interesting is gold has been showing strength recently. Gold itself, the underlying commodity. And if gold goes higher, a lot of times that can influence these stocks to break out and go higher. So that was one we had a question on, but gold has recently been strong. The gold miners, not nearly as strong, but it could be one to keep an eye on as well. But hey, steady as she goes in that regard. Okay, now what I wanted to do was take a look at some of the potential trades that might be forming for this week, some of the example trades that we could look at. All right. And I am going to tap into some of the sector strength. But first, before we go there, there's one out there. There's an area in industry that actually fits into some of the industrials that wasn't doing good collectively as a sector, but individually, some of the industries are a little bit stronger. Here is GD, or General Dynamics. Okay. So if we look at General Dynamics real quick, under the Analyze tab, just under fundamentals here, you'll see that it operates in aerospace and defense. So sometimes the defensive companies that are quote unquote defensive, they are also defensive in another way too. Sometimes they might go higher when markets are a little bit weaker. Now, within this class, I wanted to talk about kind of combining today too. We looked at using price patterns combined with an indicator showing the possibility of maybe some strength or indications of compression, price compression. Let's pull that up right now. We talked about it a little bit last week and the week before, and I'm going to knock out RSI for now, but I'm going to put in the TTM squeeze again, which gives us an interesting reference to that consolidation that a lot of times we'll get when we'll get that when prices do begin to compress a little bit. In other words, the range of the price becomes a little bit tighter. Sometimes we'll see that ahead of breakouts. And I wanted to use a pattern today. I'm going to go a little bit bigger, longer term, so you can just see this. Oh, let's go over here. Click on our daily chart. There's our 1-year chart. And does anybody recognize what chart pattern we might be looking at right now? Well, we might be seeing strength in a defensive sector. It's also referred to, like I said, as defense, aerospace and defense. But you guys are getting good with this. I'm going to draw some lines. Okay, here's a line right there that we're just breaking out of today, right now. Let's draw a couple of additional lines in here. This is sometimes seen as a shoulder, head, shoulder. Now, it was pointed out, appreciate that in the chat. Very, very good point. Again, we are going into another earnings season. We've got to be mindful of these for sure. But there's earnings. A lot of times over the 3 to 10 days, we might meet that window, but it is something to keep in mind, no doubt about it. Okay. So as we look at this right here, this is the possibility of a breakout on an inverted. You guys got it. Awesome. By the way, sometimes it could be a cup and handle. Yes. So they do look similar to a cup and handle. It's just that like the little different support levels might represent also an inverted head and shoulders pattern. But this portion here is, you're going to find that an inverted head and shoulders pattern, but you might also get these little legs to the left and the right that highlight this. But the interesting thing here is we're just breaking out. Now, I wanted to tie this in. So again, shoulder, potential shoulder, head and shoulder, we might be seeing here. And it's interesting because that cup could be in there, and after the cup, and by the way, sometimes after the side, as you get the shoulder, it kind of flags a little bit too. But notice down here too, we're getting just an early indication of a little bit of compression. And that can mean sometimes that we might be on the verge of maybe a price coil / breakout. It just so happens that it's happening within a price pattern too. So combining those two can be helpful. And we'll look at other indicators as well. There's no doubt about it. The other one we talked about a little bit last week as we went to volume is the money flow. Money flow, very, very strong. In fact, money flow, let's expand this out a little bit so you can see this, as just maybe further indications that it could be a setup example that traders might want to look at. Notice over here with this high over here, money flow reached about this level, but look where money flow's at now. What's money flow been doing? Well, money flow. Now, money flow, again, looks to try to net out buyers relative to sellers in terms of buy volume, sell volume is what it attempts to do. Much, much stronger right there. So that's interesting. And normally I would just say that it's interesting, but that would be generally construed as a positive for traders to look at. And so too, as we're mentioning, potential for a squeeze, the TTM squeeze. A quick reminder on that squeeze again, that's just simply the Bollinger Band going within the Keltner channel. Two different measures. They both have squeezes associated with them, but it's kind of an extreme measure. A statistical low in terms of price volatility. And like we said, sometimes when you get that, you can get that explosion out of that range. You don't have to look too far on many of these to see it. Notice over here when it does come back to green, what did prices do? Well, they moved. They can move up or down. In this case, we're looking at a price pattern that might move to the upside. Now, a quick note on this price pattern. When we break that neckline, which I'm kind of highlighting we did yesterday, that was the highest closing price, it looks like, yesterday. Now, what is the potential target here? Well, generally what we'll do, and I'm going to use these closing values as opposed to this spike high right here, okay? We had another little spike high here too, but how they're generally measured is the high of this run. I'm going to use closing prices, pulling it down to this level here, and that same measured move from the high to the low, we would estimate this up here. And again, we've done this so many times, and folks, how many times does it fit us in? Right near prior highs, right near a prior high range. It gets close to it, and that could be of interest. Could we get back up into this, what's referred to on a fundamental range, a value level? It was pointed out in the chat though, hey, be mindful of that 3 to 10 day window. And how many days? Let me tell you how many days we've got before we hit that right here. I'm gonna just go to my pointer tool on Thinkorswim. We have a total of about 16 days, which puts us within that range. But if I come down here, we can look at it. So it's before the market open on 423. It's so nice. It's beautiful to have these here to be able to make these quick adjustments as well. Folks, if you're finding this type of discussion helpful, you're trading, we'd really appreciate it if you'd smash that like button. It does help us on the algorithm side to get the content out, and would love to have you do that if you'd be so willing. Bottom right-hand corner of the screen as well. Just click on that subscribe button. So easy to do. Love to have you on board our Trader Talks channel if you're not already. Okay, well, let's look at that target up top, and you can see that general range. Now, we have already reached that level, so we may have a target that could come up a little bit higher, and I realize that's a bigger move, but we'll see if it does unfold as we're breaking out right now. Oops, let's clear that off, and let's put a trade on here. I'm just going to use 50 shares. This is a little bit more expensive stock. We've talked about utilizing options. We talked about short put verticals. I'm going to go ahead and just elect to do stocks though today with this. And what we're going to do is we're going to put a potential exit level right below this point here, this 10-period moving average, okay? Now, that's initially today what we're going to put on as we put this on. There's only about, what, a half hour roughly left in the trading day, but this could be a level. Now, there could be another level we could look at too. Tomorrow, if we wanted to keep it a little bit tighter, right at this breakout, we've talked about prices trading below the low of the prior day. Now, that's going to be a lot closer. Now, tomorrow, it seems likely, we don't know for sure, but our moving average line could also be up a little bit too, which could help to raise the possibility of our stop order as well. Okay. Our exit order. But for now, let's go ahead and set it here. Okay. Again, though, if you're doing this as an example trade, you could certainly put it below this low as well today. We're just giving it a little bit of room in case it goes sideways, just as it's broken out here. So let's get that set up in the trade tab right now. And by the way, this level, you can see 168. Let me go ahead and just set it up at, 268 right now as it stands. So we could do that over here. I'm going to right click the ask price by custom with a stop. In fact, I'm going to put the bracket order on as well as we've got it. I'm going to get in the habit of doing that more frequently so we can get those target levels in there too. The first point I wanted to look at here, I'm going to just actually put these as good till cancel on both of the stop orders here. You can see we've got the upside right here. And let me just do this for now. I'm going to do an adjustment on the chart, which is so easy to do. But watch this. I'm just going to go 280. I'm going to put this one at 264. And I can make those small adjustments just visually very quickly right after. Now, I'm going to go ahead and flip this over, like I mentioned to you, to 50 shares. Tab that through. Oh, let's see. Lock it. There we go. Didn't lock that one. Lock it up first. Okay, there we go. So we've got a 50 there. And again, one will cancel the other if one gets hit. So let's take a look at the confirm and send button up top here on our paper trade and see what we've got. You can see that just do a quick confirm on this order box just to make sure that we've got this in correctly. And you can see what we're doing. We're buying 50 shares. We've got an exit up top and an exit down below, potential exits. Let's go ahead and click on that. We did send it through and we did get a fill. Now let's go over here to our tab and we've got our two bracket orders in place. Now you can see that each of these, I can actually pull this up. Yeah, I set that way low. Sorry, I did 164. So right there, I'm just going to adjust that right below this level. Boom. Okay. As that target's in place, and I'm going to scrunch this down and we'll just kind of minimize this and we'll get that potential range over here. I'm going to zoom this out. This is an estimate, but I want to make it a little bit better than an estimate. So let's do this. I'm going to go ahead and just take my closing prices. And I'm using those because I had that big spike up top here. Okay, that same level though, I'm just simply going to duplicate it and pull it right back up there to that point. And that's going to be generally our exit level in terms of the price target right there. Do you see how we did that? I'm just going to confirm and send, make sure that's correct. It'll show up right there that we've got it. But now we've got our bracket order. What do we love about these bracket orders, folks? We love the fact that the potential risk versus potential reward is heavily weighted in our favor. It's one of the nice benefits of using a price pattern that is maybe giving you some interesting indicator signs of a possible breakout, right? And so if we were to measure our possible risk with that stop in there, we talked about the details there, but it's quite small relative to the upside. And this is the potential for reward in blue. Yeah. You guys like that? I mean, that's what we like to look for. A lot of times, I mean, that's going to be many more levels if, in fact, you were to get that big run up higher. But we'll see how that develops within this defensive industry. By the way, when you want to set this back again, just to make sure that your charts aren't all messed up, you just go back to auto. So I'm just clicking on this button up top here and then auto right here. I don't know a name for that, but it's right below patterns. Okay, that's our first one. All right, very good. Well, let's continue on. I wanted to look and tie in some additional indications that we talked about last week, not just to our indicators here, but also to maybe some multiple time frames looking at that might be developing on a longer term scale as well. Now, this is interesting too. We're getting a couple of these. This here is, yeah, let's see, Allegion. And if you look at Allegion, you can see a little bit of a shoulder, head, shoulder here. It's in a very tight range now. Is it broken out yet? No, it hasn't. But I'm going to show you on a multiple time frame why this could be interesting. Before I do that, let's hit a couple of different indicators. Now, the key one I wanted to focus in on is our bottom one today. Still, emphasis on volume 2. Look at this. Really, really tight compression. Right? It's almost being at that picnic, right? Where you've got a watermelon seed. You're squeezing it really tight together. It's going to move, right? When it comes out, it's going to be up or down. In this case, we're just looking for the possibility of an upward move. Sometimes you get that same price action, that coiling action in price. And sometimes with that coiling action, you do get interesting price formations that occur. We're right at this neckline here, and that could be interesting to the upside. I'll put a question mark there. Okay, look at the money flow. Money flow has exceeded this high. And when money flow does that, money flow gives an indication, according to those that use money flow, right, that we should reach this top. Now, will we do it? That's a good question. It exceeds way beyond our swing trade time frame, but it is something that traders would consider to be a positive. We've been getting a buildup when prices have gone higher. There have been more buyers relative to sellers. And so all else equal, that could be a positive in terms of money flow. Now, we're getting that compression in there. And when the compression unfolds, prices are squeezing tighter. A lot of times what you'll get on the move in natural form of a price formation is a breakout. Look over here with me. Do you see the compression? Doesn't have to happen. This is actually more of a price pattern, I would say, than we're getting over here. But this is the extension of the price move coming out of that compression range. And that's what we might be looking at over here as well. Now, I promised you guys, if you picked up on it from the beginning, I wanted to look at multiple time frames, or look at a little bit longer term time frame. Could this be an interesting low? What's sort of been the character of the longer term trend? Let's flip to the weekly up top here, and I'll highlight this for you. Okay. Have you noticed a tendency with prices? Over here, I mean, I'm going back to 2022, using that longer term weekly time frame up top. This is just a weekly chart. Lets us know maybe a longer term range as well. But look at this with me. You're getting these pullbacks, pullback, and here we are again. Another pullback. Folks, what's been the direction of the trend? Longer term. This is weekly. Longer term. And could there be a longer term follow through? Sure. That's what weekly charts do. There might be longer consolidations, but at the same time, there might be longer term or larger pullbacks as well, follow throughs as well that come with it. So what we just looked at on the daily chart, we saw the compression, we saw some money flow indications, but what we saw was this trend line, and boy, you can still pick up on it just a little bit right there on the daily chart, where prices have been consolidating in a possible price pattern that's happening at the bottom of one of these weekly ranges. And we'll see if there could be an outcome here that could do what we saw over here. That's what some traders could look at. A follow through, follow through, follow through, follow through. Will we get it again? That's the question. But we're looking at that on a daily basis and actually tying in some multiple time frames. So I wanted to highlight that for you as well. Now, this one has not broken out yet, but it's kind of holding right at that range. And so what I'm going to do right now is tap into some of the tools that we've got on the Thinkorswim platform here to help us out. I'm going to right click just right at that level. Now I'm going to do a couple, actually, let's do this. Let's even go a little bit deeper into the toolbox, so to speak. And I'm going to right click on the trend line itself. I'm going to draw a trend line. I'm going to draw an alert, create an alert with the trend line itself. Now, the first thing you want to do is adjust this up top to a above, crosses above level. Okay, and I'm going to do this. I'm just going to type in breakout question mark. Now, the beauty of this, and I've used this for years, I've had alerts that have been on for 2-3 years over a long-term range. And one day I get a text message that comes out about 3 to 5 seconds after is what I've timed this as. No guarantees on that. I've just noticed that you get them very quick. But you can set these up into setup and then just go into application settings, these alerts, go into notifications, and you can select that right there. You can do an email address, you can do a phone number. It's a great way actually to get notified if it breaks out. We can also do this as horizontal lines too, but this is just a cool one because we do use a lot of potential trend line breaks. Like say, for example, over here, if we would have had a trend line break like this in place over here, drawing it off those tops, boom, 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 where we have gotten the notification, we would have gotten it that day right there. Just because that's when the trend line broke. It happened to be a very interesting level on the chart, but yes, that's when we would have been notified. Of course, you can also get it to make sounds on your computer, but if you happen to be away from your computer, and like I said, if it's a longer term alert, well, that's something else that you want to kind of look at. You might not be looking at the stock every day. So I've got that in place. Now, the next one I wanted to look at, SNA, has a little bit of a longer term flag pattern too associated with it that you can pick up, tying into those multiple time frames right there. There's your flag pattern. It could be on the verge of getting going here. We've had a lot of these compression bars right through here, which is like sometimes you get before it's on the verge of breaking out. Again, we're tapping this into, tying it into a price pattern and the possibility of a breakout. Okay, let's do this. Gosh, how many days? Oh, we can do this. We can measure this. In fact, if we come down here, I'm just wondering how many days we've been in that squeeze. That's a lot of days. You don't always get it that long, but on these bigger term moves, you can't. That's 20 days into that squeeze. You don't see that every day. So that's been there for a while. Maybe you do get a bigger term breakout. You can see some of the breakouts that have occurred over here. That actually kind of started the move in these pullbacks here, but no guarantees, no indicator's perfect, but we are trying to combine kind of the power of two tools today. One of them is actually a price pattern. The other one is indicators, in this case, the squeeze indicator. All right, well, let's do this. So that's kind of a longer term perspective, and you've got the squeeze in here, but have we broken above the range yet? No. We have not broken above yet. Patience can be a virtue here, but gosh, it's got to break up a little bit higher. It's got to break above maybe a resistance level. So what could we see over here? Maybe some highs. What if it broke above that level? And I would even say this, because our squeeze began forming over here. Look at this, just a little bit higher. Now, I can't do an alert on a trend line necessarily there, but what I can do is take that level, which also encompasses these highs right through here, and I can right click on it, and I can scoot right on down to create an alert. At or above. You want to confirm that. I always put a question mark here, breakout question mark, so I can get the text and I know exactly what's going on. I can go and take a look for an alert on this. But this is one that's, folks, that's a lot of compression days. Now, normally when we look at it, it's like 2 to 5, or I guess 1 to 5 or so, right into that range. But keep an eye on that. Now, I promised you, I wanted to show you a few of these that might be developing also in the energy sector. So, energy, let's do this. XEL. Okay, what do we have over here? Sure, a little bit of a tighter range. Money flow has been holding flat, but look over here with me. We just broke above a high right here. Look, what do you see on the long-term trend? Any indications from the longer-term trend over here? Look at that. Pretty strong move up. There's the weekly chart. Okay, there was a big consolidation, but the trend has established to the upside here and a little bit of consolidation, just breaking above some highs. So that's one that could be looked at too, right there. Now that is, it falls a bit into that energy category. I don't think Steris does. I apologize. Steris does not. I'll get some of the others. Hang on a second. But that one too is a little bit of a consolidation. It too has this sort of a compression of price. Money flow, very strong in terms of what we're seeing right now. Could that play a role? It could. It could play a role. AEP, American Electric Power, breaking the trend line and actually going higher right now. Now, we've dipped a little bit right through here, but this could be a fun one too if we're okay to put a trade on right now. Do you see what we're looking at? See the flag pattern? The flag pattern breaking above this longer term range right there too. So we did break some highs, and there is your potential flag pattern, just barely getting above this high. Now I realize we pulled back a little bit here, but I still want to put on a 50 share trade over here on this one, and we'll set this the potential exit right below that stop level as well. So let's go ahead and do this, and this will be our last trade of the day. But I wanted to show you guys several examples to kind of take a look at. Very good spread between here, although it's in the $100 range. It's still, the day, about 2 million shares or so. I'm going to go ahead and just right click. I'm going to go ahead and create a buy order with a stop in this case. As I mentioned, I'll lock this in. We'll go 50 shares right there, tab through, and it didn't do it. That's okay. We'll do it again. There's our 50. I'm going to set the stop, the exit, or stop on a good tail cancel right there. And we can keep it there and I'll adjust it. But let's look at the confirm and send for just a moment so you can see it. And we're just confirming where we're trying to buy at, where our potential exit would be. Look at other information here. I'll send that through real quick. And there's our fill and paper money. We'll go ahead and go to that, and I'm going to back out. What I'm going to do is just adjust this a little bit higher on that order right there. Now, where could our target be? Well, can you see the flag pattern over here? We've already reached our T1, and so that's why we're reverting back to the possibility of an exit order below that 10-period moving average. But we can actually look and see this could be an extended flag pattern or a shorter term one, right through here up to potentially close to the 115 level. That represents a little bit more than 5 points there. All right, folks. Well, I wanted to go through at least a couple of example trades that we put in and show you just several examples that might be also flag patterns. We'll have to see how they unfold. But it was great being here with you today. Again, smash that like button. Helps. Really appreciate it as a favor. Helps us to influence the algorithm, gets our content out more frequently. I'd love to have you smash that subscribe button as well. Well, I really appreciate Scott being here and helping out today. All of you here, folks. I hope you have a fantastic rest of the day. I look forward to future discussions with you. Look forward to it already for next week.